Okay. If you're watching this on video, it's all seamless. So that he did a clap. So it's all seamless here. The first topic is banks.
Yes.
Three banks in the U.S. have failed. And I wanted to talk about the bank overseas, the investment bank, Credit Suisse. I don't know if you've heard about it. Been all over the news. Really big international news. UBS. This might be a
What's
little.
UBS?
Okay, it's another bank, but let's. Okay, let me break it down. Actually,
Break it down.
so I feel like I don't want to get too into details. I want to say that essentially what had happened was that there was bad risk management happening at these banks. What what ends up happening when bad news comes out about a bank is that people get worried, people panic, and then people want their money. They take back what's theirs.
Yes.
And we're gonna take back what's ours in the video. No.
And that's called a bank run.
Yes.
Or run on the bank.
We are finance majors.
I am not a finance major.
Finance majors.
Business major.
Business majors. Yes. No. I also want to say this with a grain of salt that there's a lot that I don't know about like the whole banking industry and banking structure. This is what I've read, my opinions, and what I think. It could be incorrect, wrong, and I would want the listeners to correct me if there's anything. If they want to, they don't have to. But sometimes it's.
I don't think you said anything yet.
Yeah. Okay. So
Essentially,
essentially, what happens is what happens when fear comes is that a bank, people want to withdraw their money from a bank. They don't think that the money is secure. What ends up happening is what Jason pointed out is called a bank run. And a bank run essentially is people pulling their money out all at one time. And because the bank does not have all that money all at once, because they divert a lot of their money to different investments, they put their money in a bunch of different places. What ends up happening is that the bank cannot provide the money to the people wanting to withdraw. And then everyone eventually starts wanting their money back, and they can't do this because they have their money tied up in other places, like different types of securities. But essentially it boils down to what happens with the bank stock, and it takes a nosedive, and it needs intervention for it to come back, like either provide additional liquidity, support, additional money, different funds to ease the minds of the people to say that it has money. That's essentially what happened here in the U.S. And it's what I want to talk about Credit Suisse, because the same thing happened overseas to a different bank. Credit Suisse, it was bought out for I forget how many billions of dollars, but it was bought out by this other bank called UBS. And this is like financial tea, by the way. I just want to say that this is like financial tea. Give me one quick second. I wanted to emphasize the point, so I took a sip. But it is like financial tea that these banks were like mismanaging funds. Credit Suisse, I sent you a video. I sent you a video about this. Maybe they have been in the headlines for very negative things. A lot of things I probably can't say on here because a lot of crimes.
I mean, yeah, there's the whole being involved with a cocaine dealer or something like that, and then there was another one where they'd hired a private investigator to go and spy on an ex-CEO who made another company.
And what's it called? And helping wealthy people evade taxes.
I mean, if you're paying taxes, then obviously you're doing something wrong.
Let's say that's why I tell you guys that I don't want to I don't want to nerd out. I don't want to like say too much about this.
It's a little too late. You've been talking for 5 minutes straight.
Okay. I'm just saying that the bank was not good. It got bought out. It created kind of a monopoly of sorts, semi-monopoly.
Before or after?
No, after, because it was like a 2-bank system.
Was this the one that was involved with like the Panama Papers and stuff?
I have no idea. I don't know. I don't know about that.
I remember it was like more involved with like the UK.
This is a UK bank. This is
The
a
Swiss? Swiss is a Swiss bank.
No, sorry, it's a Swiss bank. No. I thought you were talking.
Your credibility is going down the
No,
drain.
no, my credibility. I can feel it leaving. No, this is a Swiss bank. This one was involved in the two. If you ever saw The Big Short, this is the bank that the guy sells his credit default swaps to at the end of the movie.
Idiots.
Yeah. Oh,
Stupid.
okay, so that's the big news that's been happening.
So this is the one where if you're like, oh, I have a Swiss bank account, they typically mean credit or Bank Suisse.
Yeah, I think yeah, this is the bank that people went to keep their money safe from and to evade taxes.
Yeah,
which is crazy. I just think that it's such an interesting topic, just talking about banking. Both of us business majors. I was a finance major and I learned about this stuff, but it's interesting to see the progression of what had happened. And it was emphasized more, or just people started looking into it more because of everything that was happening here in the US as well with these banks. Like that Silicon Valley Bank didn't have a risk manager for like 7 months.
Good.
And I was like, what the heck is happening? And
we don't need that position where we're going.
And that is true. We don't. It was a bank that was mostly for rich people too. You know that?
SVB?
Yeah, SVP was for rich people and like startups. Like I think who was it? Roku had like 500 million in the bank with them.
Really, 500 million.
I think it was 500 million or bill. I have no idea.
Had like, there are a lot of these articles about like, oh, they had like 15 million, but it was like executives' personal finances in there.
Yes, and it was that so FDIC insures up to $250,000. Yes. And like I believe there was an article that came out that said 90% of the people there had over $250,000 with the bank.
I feel like that's kind of skewed because think about like the Silicon Valley. Like a lot of people here make a lot of money. They make so much money.
It's but most of that money wasn't sure. I mean, they got a bailout. I don't want to come out and say it, but they got a bailout. All the people are getting their money back.
And then moving it.
Yeah, and then moving it. Yeah, there was a bunch of other stuff that happened, a lot like shadier stuff. I don't know if you heard about it, but
I mean, I could hear about it if you said it.
Oh, that is true.
Why don't you just say it?
It was about so I'm gonna say that I read, might not be true, that there was like people selling off stock before it collapsed. I don't know.
Insider trading?
Yeah, so there was a bunch of other stuff, but there was also like insiders telling other people outside the bank to pull their money out before it collapsed. So before there was a bank run. So it was kind of crazy, and I was like, you could really see who your friends are.
I mean, I feel like if you get to a certain point of the hierarchy, you eventually like, if you know the guy by your first name, like, oh hey Jim, you better pull your money out now. Don't ask questions.
I sent you. He's like, hey Jim, I sent you a TikTok, and he's like,
I sent you a Snapchat. It's about to delete itself.
It's okay. They can't track this. Don't worry.
But it was wild because so there's an SVB location near where I live, and there was like a news crew outside taking a video of it. I'm like, what is this? Just a building? The employees are out there.
You should have gone over there and been like, I want my money back, and just pounded on the windows and
Take
just made
my
a
money.
scene. Just made a scene. I invested everything in this. Sam Bankman-Fried told me to invest. He told me that this would be a safe investment next to FTX. Why do I keep on trusting the guy?
The funny one was Jim Cramer. Cramer recommending it last month. Oh my goodness!
He said he did say that. He said a stock. I remember. He's like, oh, this is a stock that not many people are paying attention to, but I think it's good, and it's been doing well over the past 90 days or whatever days it was, and he recommended it. I'm so astonished.
Bye.
I'm so astonished on how Jim Cramer could be wrong so many times. He recommended. A guy had come out and said that this is a really old Jim Cramer clip. By the way, if you guys don't know who Jim Cramer is, he's the host of Mad Money. He usually does stock recommendations, stock picks, but you could honestly go on, what is that called? Wall Street Bets. You could go on Wall Street Bets and they would probably make make better stock recommendations.
I don't think so. Not
GameStop popped 30% today. How dare you?
Maybe our investment. I mean,
no,
our investment maybe.
Our investment's boring. I'm just saying that it's not the best advice that he could give. Does
he actually give financial advice, or does he give hashtag not financial advice?
I don't know. I actually don't know. I was gonna say that I remember this clip that came out. This was when Bear Stearns, another investment bank, went under. A guy called in and he's like, "Is my money safe with Bear Stearns?" When they were collapsing, when they were trying to find a buyer, and he was like,
midway
yes.
through it, falling down, and like, "Am I safe in here?"
Yeah,
and
then the guy's like, "Should I pull my money out before it completely collapses?" And then he's like, "Your money's safe." And then he's like, then he comes back later because the guy's like, "I lost everything in this investment and collapsed." And the guy's like, "You told me to keep my money, And he's like, no. I told you that your money would be safe in the bank because it is insured. I think it was insured. He's like, there will have your money. And he's like, you give stock recommendations. Why would you be talking about banks and keeping money in the bank? It was literally the stock recommendations. Yeah, I don't know. I get so heated? I don't know. It's so crazy how he has failed up.
Who, Jim Cramer?
Yes, he gives bad advice and he keeps on getting more popular.
I think it's about being entertaining. He's definitely entertaining.
It's because he has a little hammer and a chicken. That's literally it.
There's a whole thing of buttons they can press. Buy, sell.
You know what, listeners? We will have a button that will tell you to
easy button.
An easy button, yes. We will have an easy button. Yeah, but that's sort of the segment, the banking segment of it. It's been crazy. Literally the past few days. I don't know if you have anything else that you want to add.
I mean, it seems like there's a lot of emphasis on how the banks in general are like not good right now. Like there was an article about how Wells Fargo wasn't doing. Oh my goodness, I have a shot glass right here.
Oh, I didn't.
Never mind. Here you go. This is much nicer.
Yeah, that was not great.
Here you go. Now you can have a strawberry cranberry. Not strawberry cranberry. It's a cranberry. Okay. But yeah, I think like the crazy thing is that all these banks aren't seemingly like out for your best interest. It seems like there's like a more emphasis on making profit.
Put your money in Chase. They have the most. I think they came out and said that JP Morgan Chase. I think they came out and they said that they had a good amount of liquidity and people shouldn't be worried.
But that's what they all say. Why would you say the opposite?
It's a bigger bank.
They have a risk manager, and he said
they
don't
have
say
a risk
that.
manager. They also what's the other bank? I didn't want to talk about this, but the other bank is First Republic.
Wachovia?
No, God, no. It's First Republic Bank stocks have been getting tanked because they were doing the same thing Silicon Valley Bank was doing, and they had to get a cash infusion. Okay, I'm not gonna.
False.
I'm not gonna go and keep on talking about the banking thing because I could go on forever. But
I mean, that's fine.
That is fine. But we have other topics. We have other things to talk about.
Okay.
What my last note?
Okay, go ahead.
Wait, no. I wanted to say the last note is like what Jason said. It's like keep yourself safe. Keep your money where you know it will be good. I mean, it's hard, but I think like these smaller banks, maybe not the best idea. But I mean,
smaller banks, Credit Suisse.
No, that's overseas. But these like Silicon Valley Bank. I mean, those were for the rich people mostly. I don't know. Just I was
so like a
Chase.
credit union maybe.
Yeah, maybe not a credit union. Maybe
not a credit union.
No, I said maybe. I bank with Chase.
Oh, you have a.
I bank with Chase.
Hey, Wells Fargo like makes people free accounts. This even if you don't want it, it is just in case you wanted an account.
I also bank with Wells Fargo.
Diversifying your portfolio, I see.
Yes, you're FDIC insured for 250. I don't know if any listeners are. I don't know if any listeners have over 250,000, but if you do, diversify that, and your money's safe.
I mean,
Unless there's a bailout, then it does. It's all money.
250,000.
250,000 bones. Okay, but yeah. Overall, yeah, you're good. You're good. FDIC insured. Keep yourself safe. Keep your money safe. Don't worry about it. Don't sign up to payment processing. Okay, right. but yeah, but that's it for the banking segment of that. And we did have other things. We can't be on banking forever, unless I would really want to, and investing and finance and stocks. But we do have other things to talk about.